All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, January 3rd, 2024. If you're not done so already, please give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Again, live day trading room is on sale for the whole month here. So $39.99 for the first month to try it out. Strongly encourage everybody to do that. Anyways, let's get into it here today. So markets here, a little bit of a downdraft. And it looked like it was going to be a bigger down day. You can see we gapped down open after the surge yesterday. So kind of a little bit fake out there, gap down open. And then we had a pop on the JOLTS number, slightly lower than expected, but we came right back down. It looked like it could be a big down day. I talked about 4,700 earlier this morning, and they're trying to gun for it right now. It's about 10, 12 minutes left into the close. I would think, I don't know, I would say 47.05 is probably going to be the max right here unless they really flush it. But either way here, it looked like it was going to be a big down day. We put in a low and then we rallied up, pulled back into the Fed minutes. Little whipsaw there. What did they say? Nothing new, right? So a little whipsaw, outside move, new high of the day, and then we rolled back over. But overall, especially like the Qs, for instance, like very tight range, gap down. And yes, we did go down from where we opened, but I mean, it's very, very tight so far. Again, doesn't mean they can't try to flush it in the last 10 minutes and push that gamma down to 47.05, even 4,700. But overall, just a lot of chop here. Right now, I can't believe I'm saying this, but, again, I think the bears are getting a little loud already. I know that sounds strange. Maybe it's just me. Maybe it's just anecdotally. But it's like we've had a 3-day pullback here, and, we knew that was coming. We talked about a pullback into the first week of January and then probably a January effect type move. And so far we're on schedule for that. But I feel like the bears are getting loud here. I hear a lot of I told you so's, everybody talking about recession, this type of thing. That's just my opinion right now. Again, I could be completely wrong about that. That's just my anecdotal experience. But right now, this is just a 1, 2, 3 pullback into the 20 moving average. That's really all it is right now, until proven otherwise. So if we take a look at this, we did have some good volume, and we have had good volume coming in on the selling. So that definitely does need to be respected. But overall, I mean, this market was overbought. And there's nothing to say we can't just consolidate here. There's nothing to say that all of this here isn't just consolidation for a move to spike that high. So I just want to be careful here. Don't get too bearish just yet. We had a big up year last year, and a lot of the time when you do that, there will be a January effect the following year. That doesn't mean it has to happen. We did get divergent there with that little kind of divergent high with that little doji. We talked about the RSI, right? I've been asking for a pullback here, and we're getting it. So there's nothing to say we can't top out or can't have already topped out. But right now, I just wouldn't get too bearish here. If there's a bear market, and I'll say this every time, the first leg is always the weakest, right? You didn't have to short right here, right? Because this could have easily just been another one of these. But you probably thought you missed the move the entire way down, but you got a 75% retrace right here. And if you don't believe me, I'll draw it in. So you get a 75% retrace. So there's a chance to get in. You don't have to short. If you short down in the hole here, there's nothing to say they can't spike this back up. That's all I'm really trying to say here. I will say, and I've talked about this the last day or so, but the Qs, I'd say there's a higher percent chance the Qs have topped out. And we could see a scenario where the Qs top out here. Maybe we inch down tomorrow. Let me get my tools out here. So, right here, right into this zone, there's a lot of support here on the daily chart for the Qs. So maybe we inch down into this, and then we could put in maybe a lower high off of a retrace. While, say, the SPX, maybe that just inches lower, slices the 20 moving average, and that could make a higher high on that bounce. Why would I say that? Because we've seen it many times before, right? We saw it in November 2021 into January 2022. We saw it right here in late July with the spiders making higher highs versus the Qs. So I definitely think that's a possibility as well. And again, we've talked about big tech. What's been down the most the last couple of days? It's been big tech, right? Magnificent Seven, lots of profit taking going on. Take a look at Broadcom. Pretty good dump here. And by the way, the Qs here, this was the December low. We've retraced about 50% of that already. I mean, take a look, right? It's, just a couple of days. There it is. They're 50% fib there just in a couple of days. So again, it's Mag 7 coming back in. Now, to be fair, the Russell did come in today as well, but again, Mag 7 still leading. In any case, we'll look for the cues here right at this area. If we don't, like gap down and reverse tomorrow or something of that nature. Also keep in mind, NFP is on Friday. That'll be a big one. But right now, the spiders, again, 20 moving average. We may fill this gap here. If we get through that, there's a lot of support at 46.50. Also a gamma wall at 46.75. So keep those on your radar. The Russell 2000 was bouncing off the 20 moving average earlier today. We'll see if that can confirm below it tomorrow. It's going to close below it today. We'll see if it can confirm below tomorrow. But you do have a gap fill right here, 193 spot 33. So right there, that's actually where we sold the Russell 2000, right up in that range. And it's round tripping it right now. So we'll see if that gets defended tomorrow. Again, sometimes you slice the 20, the next day you pierce it, you come back. Maybe we pierce the gap, we come back with a tail. So we'll keep an eye on that. But Russell down 2.75. And finally, this was way overbought, way extended. And we've been talking about that needs to come back in. The Dow here as well, down 81 basis points, but still, I think, easily the healthiest out of the major indices. Take a look at UNH. That is still green on the day. XLV, not that this is a Dow stock, but it's a defensive. And XLV down 25 basis points versus the market down almost 1%. But, was green for most of the day and then came back in. You're seeing kind of Goldman, JPM, they're pulling back here, but still acting well, right? So that's helping out the Dow here, big Dow components. And again, right now, there's plenty of room here for a higher low on the Dow. We could go down and tag the 20 and, shoot up to 380. That's certainly a possibility. So again, all I'm saying today is don't get too bearish right now. We've had a big run, and usually that first leg of the bear is the weakest. So just be aware of that. There's nothing to say we can't push up and make one more high here. SMH here down 2% on the day, coming into that 165 handle. So I think we talked about that yesterday right there. Let's get rid of this level. I don't care about that anymore. So right in that area, 165. We'll see if that gets defended tomorrow. There's a smaller level right here, a gap, and then below that, the big level will be 155, 156. For those of you who follow the stocks, again, kind of getting close here to that 38.75. So maybe that coincides with 165 there on the SMH, but previous all-time high. It might not be. Yeah, previous pivot high, previous major pivot high. There's the all-time high, but kind of coming into that level right around 3,900, pierce of 39. Then you've got a lot of support right there at 38, and then 37, 36.50. So there's lots of levels down here. It's just a matter of which one gets flushed the hardest and which one do we get that bounce off of. Anyway, IGV continuing to follow through to the downside, down 1.5. Again, way overdue. We've been talking about this for a while. Nice outside move here on the weekly. We'll see where that ends up on the week. And that still has plenty of room for a higher low as well. You've got a gap here at 382 spot 70. Kind of coincides with the 50 moving average. So at this point, I think it probably gets tested. Again, it's just a matter of, do we hold this area here tomorrow, bounce up, lower high, and then into that area? Or do we just go straight down there and then put in a bounce afterwards? That remains to be seen. But IGV Cloud coming in finally, and again, it was very, very much overdue. Transport's also coming in down 1.6. Again, believe it or not, this is not broken. I know it looks like it is because we're below 15.6, but it's not broken yet. You're still above the moving averages here. 50 is crossing above the 200, starting to create a little space here, and there's plenty of room for a higher low. So again, big support will be at 15.2. And then you got a little bit more at 15.4, but the big one is 15.2 if we get down there. But nice little fade there on the transports, definitely needs to be respected. But there is still plenty of room for a higher low on this. So again, just saying, don't get too bearish just yet. There's really nothing structurally wrong with the market, at least not right now. All right, anyways, let's get over to yields. And you see the 10-year there, the 2-year here, got a pop and then pulled back. So again, you still have a bearish inside bar here on yields. This is another reason why I don't want to get too bearish just yet. If this breaks down, this is still a bearish inside bar. If this breaks down, it's going to be a tailwind for stocks. You see the 5-year there as well, rejecting the 20, 10's rejecting the 20, 30 rejecting the 20. And again, I like the TNX a little bit better because you can see the engulfing candle there. on the TNX and the TYX. Again, so if they start to dip down, it's probably going to help out the markets, right? That said, I don't see a ton of downside. You guys know that. But one more push down could give a lift to stocks. So just be aware of that. Keep that in your back of your mind. XHP down 2.72 currently. Let's take a, so maybe I'll remember to do this before the end of the day. So we're right on that level, 91.95. So we'll have to watch where that closes. A close below that would negate that breakup bar. So that would be interesting and definitely would make XHP vulnerable, possibly down to 86.50 or so. So we'll definitely keep that on the radar. We'll see if they save it here. We got about 2 minutes left. We got about a minute left. So try and remember that when the bell rings. But that's the big level to watch for the XHP. And could put it into corrective mode down. Now, it doesn't mean it's going to crash, right? It doesn't mean it's going to go straight down. But it definitely would be a sign of weakness there for the home builders. VNQ, pretty good outside move here, down 2.38. Again, we talked about this weekly level right there, the 100 and 200. It's going to need weekly consolidation if it's going to move higher. But again, pretty good reversal from yesterday's price action. XLF also down as well. But again, no real problems here. This is still, it's overbought, but trend is up and you can still get to 38.25. I don't see any issues here with the financials. KRE losing the 20 moving average. That still has support at about 50, maybe 49 and change. But we'll watch that here going into tomorrow. KBE, same thing. We'll watch that at 44, but that can still get to 48.25 if the market cooperates here. And then broker dealers coming in, that should have some short-term support at the 20 moving average. Possible little drop and pop kind of setup there if it hits that 20 MA tomorrow. All right, so crude here had an interesting day. So yesterday it did like the opposite of what it did today. So we opened up and then we rallied hard and then we sold off hard. Today we opened, we sold off, and then we rallied hard. So crude acting well here. This might be a low. I just can't guarantee it. So I am looking for a low in crude sometime around like now. You know, you got a pretty good bid here. I just don't see enough. I'd rather see a bull pattern. If we could see a bull pattern, that would make me feel a lot better about it. I would have felt better if we had a divergent low as well, but crude getting a nice bid here, and you know, we'll leave it there for now. So it's having a nice day. I am expecting higher crude prices in Q1, but I've got to have, you know, my entry and my setup in order for me to play it. So taking a look here. So just to go back, XHP did close below 91.95. So we'll say that is vulnerable now. Just to go back to the home builders there, you do have some support at the gap, but and then right around this little area here. But next big level is around 86.50, 87. So watch that there. So a little failure there for the home builders. So they are vulnerable now. XLE pretty good, but this is one of the only strong sectors all day. Little pullback pattern, and it got a pop intraday. I was putting this out in the trading room as well. Nice pattern there, and that took off into the afternoon. So XLE acting well, up 1.6 on the day. XOP also behaved well, up $1.28. Again, those patterns are still okay. I don't love them, but you could make a case this is bullish consolidation here. XLE obviously the strongest, the OIH the weakest right now, up about 40 basis points. Nothing terrible. I would prefer a rollover on this to 280. That would definitely get me interested. CCJ continuing lower. Need a weekly close below 42 to really kind of put this into corrective mode in my mind. And again, even so, you're still above those weekly moving averages, so just keep that in mind as well. URNM, that is still very strong. On the weekly, I don't see any issues. Nat gas continuing to trade up off of this bull pattern. We talked about the gap up, faded yesterday, came off the lows. And then today, nice pop here. So get a little retest yesterday of the gap up essentially, and then continuing higher today. Again, we'll look for this around 280, 283. And then your next really big level is going to be around 3, and then maybe even 325. But right in this area here is the next big level for nat gas. But I think it can get through 280, 285. Maybe not in a straight line, but nice little spike, nice little low there, bull pattern, and then an up move for nat gas. So that is shaping up much better. All right, over to the all-important dollar. So the dollar is interesting, and again, this is kind of shaping up with yields. It held up today, so if we look on the intraday, It acted well, but around right before the close, it got hit pretty hard. Now you're putting in a little inside bar, bear flag there, intraday. But we did close below, what did I tell you, 102.50, right? So that's essentially right where we are right now. Again, a little pierce, I said 102.60 or so if we get up there. It got to 102.72. But the point is, line in the sand was that low, with coinciding with those highs, coinciding with the 20 moving average. And we'll see how this behaves here. If it starts to come back in, and notice the exact perfect positive correlation with yields, right? If these come back in, that's going to be a tailwind for stocks. So that's why I'm not like super bearish just yet. But it did hold that, it got a nice pop off the lows, and we're holding that level. Again, I'm very interested to see what this closes the week too, because we talked about this weekly trend line. We spiked it last week, and now possibly reversing that. So again, we'll see what the dollar does here, but right now that's the big level to watch for the DXY. Gold and silver here coming in pretty good. So gold down 1.15. It is trying to hold that 20 moving average. It didn't quite get down. There's a minor little day trading level at 2030. I don't know if we'll get there or if I'll even like it tomorrow. But after that, right around 2020, right? Pivot high, 50 moving average. Pierce of that area could be a level to watch going to tomorrow if we get there. But again, I've said this multiple times over the last month. I think yields will be a problem for precious metals in quarter one. And you saw the yields didn't even finish green, but they were up early, and that did put pressure on precious metals, and so did the strong dollar. So that's kind of my thesis right now, and that's why I'm waiting for PMs to kind of do some more backing and filling before I get really interested. But I am interested, but it's just a little bit of a waiting game here, and got to be patient. Silver busting this trend line here. So we'll see what that does tomorrow. I don't even have a good level for this right now until we get to about 22. So I don't know what to do with this. You had a pretty good technical damage there with that slice. Your positive is you're above this green bar low, and that's really the only positive right now. The weekly, big bearish inside bar that could be setting up for another leg lower. Just be aware of that. But 22 would be your big level if this doesn't get saved tomorrow. Platinum doing some backing and filling, finally filled that contract gap. 960 would be a level of interest, maybe a pierce of that to 950. But platinum pulling back, we talked about that as well. Palladium also pulling back, but coming off the lows. This is also interesting. I think both of those can be bought on dips moving forward. As you guys know, copper here, pretty good dip early, and then came back in, closing back above the 20. So copper hanging in there, and again, you guys know my thoughts. That can still get up into the 4 handle. So crypto is interesting. So Bitcoin closing at, well, not closing, but just hovering beneath 43,000, was down a lot more earlier. But it's funny. Technically, you have higher lows really across the board here for the most part. There was news that there was a rumor that the ETF wasn't going to get approved. Whatever. Yeah, I did say it was a little suspect yesterday. You don't want to close back below these pivots, and we're going to do that. So a little bit of a red flag there. But I'd say this can still get to 50,000. And why is that? Because you got to look at more than just a daily time frame. And you're going to see on the weekly, you still have a bullish inside bar above all the moving averages. It's still overbought. It still needs these moving averages to catch up, but there's nothing wrong with this pattern right now. So that's my thoughts right now. Doesn't mean in the short run, if we get the ETF news, we can't pop up and then fail a breakout and then start a correction. That's certainly possible. But right now it's holding up okay. And again, bigger time frames, there's no real issues. All right, again, so let's take a look here. So yeah, again, they flushed it down. Where did it go? What was the low? Oh, it couldn't have been 47.05, could it? Okay, yeah, very close, right? So thought that's probably where we would get to. And we'll see what this does tomorrow. Again, they closed it right on, basically just off the 20-day moving average. If you look at the spiders, it looks like it closed, like literally right on the 20-day moving average. So again, we'll see what we get tomorrow. We had a 1, 2, 3 pullback. Sometimes you can get a pop off of that. It could really go either way at this point, but ultimately, I'm still expecting backing and filling for the next couple of days to weeks. And then, again, I still think there's a really good chance of a January effect until the market tells me otherwise. And again, we'll leave it at that for now. Anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. We'll talk to you guys all tomorrow.